President of the Canadian Consumer Finance Association. Mr. Vice Chairman, members of the committee, thank you very much for the opportunity to speak with you today with respect to Bill 59. I'm joined by my colleague, Melissa Soper, who's a member of our Board of Directors, and I'll be spending my time with her today. The Canadian Consumer Finance Association, CCFA, represents 11 member companies who together hold 505 of the 819, or 61%, payday loan licenses issued in Ontario to offer payday loans. Our industry exists because many Canadians need small, short-term credit that is not provided by banks or credit unions. This industry grew in response to consumer demand, not the other way around. In 2015, our members granted approximately 4 million loans in Ontario. Clearly, this is a significant and important source of credit. I have with me today a box of petitions signed by borrowers who do not want to lose or have government restrict their access to payday loans. This box is just one of 20 boxes containing petitions signed by over 50,000 people. I'll repeat that, 50,000 teachers, firefighters, nurses, police officers, government workers, and other Ontarians who've taken out a payday loan in the last 3 months. This product is important to them. Payday loans are costly to provide. Banks and credit unions are simply not set up to lend to the vast majority of payday loan borrowers. In the past, a few credit unions have announced an alternative credit product to a payday loan, but in reality, it has never been offered on a scalable basis. In Alberta, for example, where over 1 million loans are made each year, credit unions have only managed to make a few hundred payday loans. We have found that most payday loan customers who apply for these alternative loans offered by credit unions are denied. The reason for this is that banks and credit unions will only lend to people with a credit score above 600. Millions of Canadians have scores below that, including the majority of payday loan borrowers. I've provided a graph to each of you today which illustrates the range of payday loan borrowers for which access to credit from payday lenders is essential. It's important to ensure Ontarians have access to licensed, regulated, safe credit. Legislation and regulations must allow for a viable industry. January 1st of this year, Ontario reduced maximum rates lenders may charge to $18 per hundred, with the intention to further reducing the rate to $15 per hundred on January 1, 2018. The province of Alberta, without any meaningful consultation, introduced changes that fully came into effect on November 30th, 2016, and which included a reduction to a $15 maximum rate. Those changes are so recent we cannot determine the extent of impact on borrowers in Alberta. But based on conversations with many lenders, this much is clear. By and large, the payday loan product has been withdrawn from the licensed lending market in Alberta and has ceased to exist. Those borrowers on the lower credit rungs with lower credit scores are being denied access to credit entirely. The only option for borrowers on the higher credit rungs wanting a payday loan is to borrow higher amounts than they want for longer terms than they want. This is an example of bad policy that will hurt borrowers. Both the recent and proposed changes in rate are challenging the viability of licensed lending in Ontario, which in turn will affect borrowers' access to credit. The government needs to stop any further rate reductions and reconsider the maximum rate that is now in effect. I turn my time now over to Ms. Soper.
Thank you, Tony. I'm the head of public affairs for Cash Money, and I've been in this industry for 22 years. And I've engaged on short-term lending regulations in multiple countries. So I could speak on a number of areas, but I'll focus today on providing some lender-specific details on some topics which Tony just covered. In Alberta, we operate 28 stores. In December 2016, the first month in which the new regulations became fully effective, the number of payday loans that we granted in our stores dropped 94% from the same month in the prior year. And in the months of December and January combined, we lost just about $1.7 million. So clearly, we cannot continue to provide credit at this rate, nor can any other licensed lender. The Alberta government initially stated that credit unions would fill the gap. The credit unions have admitted to making just a few hundred loans as compared to 1.1 million loans made in Alberta each year. Borrowers will be forced to make other choices to access their money. Their need for credit doesn't just go away. As evidence shows in other restrictive jurisdictions, they will turn either to illegal online lending or experience costly overdraft fees, default fees, or reconnection fees.
Ms. Soper, I'm sorry to say, but